Okay, well, let's start with a question. So this one I have for Bill. Can you give us an example of an impact investment that you've undertaken with one of your clients and kind of how it works?
Sure. So we have, as part of our process, looking at particular areas of thematic interest to multiple clients. And about 2 years ago, we looked at the area of affordable housing. In most client portfolios, there's going to be some allocation to real estate, real asset investments. And so we looked at affordable housing, and when we do these landscape reviews, and you can find a public version of the final work on our website, is we just look at what's the social issue, what's the impact you want to have, who's out there doing what, how do they array on a spectrum of return and impact, what are the kinds of capital, from return-oriented capital to purely philanthropic capital, that are being deployed around that issue, and just kind of understand the landscape and tease out the criteria that are important in kind of working down the funnel to the 3 or 4 or 5 or half a dozen managers that are of particular interest to us and would be of interest to our clients. So we did that. I mean, affordable housing is an increasing issue in major metropolitan areas in this country, affecting populations well below median income in many of those locations. And we identified some managers that we really liked who were mainly in the preservation area. There's new housing development, but there's also preservation. These are properties that are coming off restrictions for affordable housing and are potentially going back into the market rate, a part of the market. But there are strategies for preserving them in affordable housing, making them on a continuing basis available to the kind of populations you want to serve. And those were the sorts of managers that we became interested in. We selected one that we had several clients go into that is, purchasing, managing properties in Washington, D.C., and Michigan, and other locations. And really, at the same time as they're purchasing those properties, making investments that are greening them from energy use, water use, and making the properties more efficient for the kinds of people living in them. So that's a specific example. Sure. I could give some that are in the environmental area, but I thought I'd pick one that I think resonates with a lot of people.
Alex, I heard you mention schools as impact. What are some of the other areas?
Yeah, sure. I think it's important to understand the differences between the types of offerings in the muni market. So there's general obligation bonds, and there's revenue bonds. GOs we tend to avoid because sometimes a GO can say, New York brought out a GO a few weeks ago that just said improvements to New York City. You couldn't even find a use of proceeds. So what we try to focus on are revenue projects, one of which is affordable housing, but also hospitals and clean water. Those are all impactful projects that have measurable outputs. In the short term, you know exactly what type of output you're going to get from your investment, but also catalytic outcomes, improving a community over the long term. We think that those three are areas that are relative value and also good opportunities for impact.
And if someone wanted to get involved with one of those investments, how do they do it?
Sure. So we have two different models. So if you want to invest in individual munis, you could go on neighborly.com, depending on where you live and which affinities you have. You can invest directly in an individual issuance. And then for clients with 250 or above, they get their money managed by a registered investment advisor. We will create a separately managed account, broadly in the muni market, but focused on credit profile and impact. So it depends on what type of security you would want, but we have both offerings.
Cole, this one is for you. Who decides if it's a green bond? I mean, who makes the decision?
Sure. So really anyone can issue a green bond providing they have bonding authority, and typically the process is you determine what the project needs would be, so you can determine issuance size. And many of the green bonds are initially self-labeled, and so you engage with a third party. Typically it could be a consulting firm that will provide adequate guidance to ensure that the issue complies with each stage of the green bond principles. Again, what was the process used to determine that sustainability objectives would be met? How are you intending to manage the proceeds? And then what are the reporting requirements? So once that is all set, then the issue comes to market. It's deemed to be self-labeled at that point in time, and the Climate Bonds Initiative will then review the bond, compare it with their taxonomy, and then ultimately provide the climate green label. And so those are the types of bonds that would only be eligible for the Green Bond Select Index. The market was started out all self-labeling, but now it needs to be have the climate green bond label.
And if someone wanted to invest in this product, how do they do it? They
open up a brokerage account. It's an exchange-traded fund, so we've democratized access. You guys can do it through any of the custodians or your broker, so it's pretty easy. The ticker is GRNB.
There you go. Bill, so it seems to me that a client would, as you mentioned, kind of a wide spectrum of what they're interested in and their impact. Do you go through a process of kind of getting to what they're most interested in, or is it more like these are generalized investments that meet impact and they're kind of here to choose from? How does it work?
So it really depends on the client. I think we find that if it's an institutional client, particularly a foundation, a mission-driven organization, they already have a well-discovered set of objectives. So that's a pretty easy situation. Whether it's a public charity with a mission or a private foundation. With individuals, it can be more of a discovery process. I mean, a typical example might be an individual who spent 20 years building her company and really never had much in the way of assets to manage. All of a sudden, through a liquidity event, has substantial wealth. She wants to continue to remain active in the business, but at the same time feels responsible for managing this wealth. Needs an advisor to help with that, and so never really had a lot of time to think about what her philanthropic objectives are, what her values priorities are. So we work in an iterative way with the client, and it's often about finding a place to begin. And you could torture yourself for years to find the perfect strategy. And with most, it's just, let's just pick a place to begin. Let's learn, let's iterate, let's sharpen the interests over time. That's often how it evolves, and we bring particular investment opportunities to the client. We work on a non-discretionary basis with most of our clients, so they're not saying, here, you make all the decisions. We welcome the engagement that comes from that kind of relationship because it helps us sharpen our understanding at the same time the client is sharpening her or his or its understanding of what it is they're really trying to achieve. So it's that kind of dynamic process.
Alex, do you all create any bonds, or are they marketed bonds already, or how do they get?
So we don't rate the bonds. The credit agencies rate the bonds, but we do underwrite the bonds on our broker-dealer side. We try to have our own firm thesis on what we want to bring to the platform. So we screen out tobacco and offerings that we don't feel like will have a measurable change in a community. So as a whole, other than focusing on revenue bonds, we like to focus not just on AAA and AA. There are plenty of foundations and family offices out there that want to see measurable change in a community, and it's hard to drive change if you're going to invest in AAA Silicon Valley water. We want to bring offerings to market that will drive change.
And how would it come about? Who is contacting you to get that ball kind of rolling?
So we have a public finance team that works directly with issuers, as well as a competitive trader that bids through the competitive market. So we have two different ways of winning deals. The negotiated market is a really challenging market because a lot of these communities have been dealing with Goldman Sachs and other investment banks for years, and relationships have been built, but they enjoy that Neighborly is focused on democratizing access and changing the way the market operates. So we do get into a lot of doors. It's harder to win the business. It takes time, but we hope that we have the right story to do so.
Right. Cole, do you guys have any other products in the mix that fall in this area?
Nothing that's like Green Bond. We have an alternative energy ETF, and where we have exposure to wind and solar and water projects, but nothing like Green Bond right now. Product development is certainly the lifeblood of our business. We're always looking for new and exciting ideas, As I mentioned briefly in the presentation, the challenges associated with impact investing or ESG has really been subjectivity. So it's difficult to find that one-size-fits-all solution, particularly in an ETF wrapper. But if you guys have some good ideas, happy to listen to them.
So I have, these are sort of my questions. I was thinking, is there any questions from the audience anyone has for these guys? How impact works or?
I guess the question was, would there be any examples of, muni bonds that are typically coming out on a regular basis where, a Catholic could really feel that, my money is really connecting with my values, like a diocese issuing a bond or, a Catholic hospital or something like that specifically?
Yeah, so hospitals is a great example, but also schools as well. There was I live in New Jersey, even though I work in New York, and there was actually a deal a few weeks ago, Georgian Court University, which is a Roman Catholic university that funded improvements for more affordable education and to make sure that women were getting better access to bridge the gender gap. So there's a ton of issuances, specifically in the taxable market, that would align well with Catholic values, hospitals and education being two of them.